Welcome. In this video, when will Zbcn coin go up? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When carefully examining the chart, one of the most notable structures is the price making a strong upward move after reacting sharply from a highly significant level in the recent past. This level is often referred to in technical analysis as the main support line or critical support zone and is represented by a red line that carries great importance for investors. This line acts as a strong line of defense where the price has touched multiple times in the past, each time attracting buyers and bouncing upward. As of now, the fact that the price has managed to stay above this area indicates that the market structure remains intact and bullish expectations are still valid. These types of key support levels are crucial not only from a technical perspective but also psychologically. Most market participants pay special attention to such zones. For those who previously bought, these levels serve as stop-loss points to limit losses, while for others looking to enter, they represent areas to implement a buy-the-dip strategy. Therefore, the price reacting upward again when reaching this red support line shows that there is still strong confidence in the market. This presents a very positive technical picture. Furthermore, support levels that are tested multiple times and hold without being broken become even stronger. In technical analysis, this is often referred to as the principle that tested support strengthens. This red line, despite being tested several times in the past, remains firmly intact. This shows that investors have a high level of confidence in this level and that the price continues to defend this area. As such, there is currently no reason to suggest any deterioration or bearish signal in the market. At present, the price is trading well above this support level. This suggests that the bullish trend remains intact and that the price has found a favorable environment to pursue higher targets. In addition, reactions from such strong support areas often mark the beginning of new upward waves. The price tends to gather strength from these buyer-dominated zones and push toward higher levels. Moreover, this support level is not just a horizontal line, it is also part of a dynamic structure that defines the direction of the trend. If the price continues to hold this level, it will maintain a series of higher lows from a technical perspective, indicating that the trend is still upward. These types of structures are particularly important for trend-following investors as they help maintain positions, evaluate new entries, and build long-term strategies. Currently, the fact that the price is far above this level and previously received a strong bullish reaction from it shows that buyers are still in control of the market. This red line may serve not only as a historical reference, but also as a cornerstone for the future. Support zones are not just defense lines, they are also launch pads for new upward moves. As long as this support level is not broken, it would not be technically accurate to speak of any weakness in the market structure. On the contrary, the preservation of this level strengthens the foundation of bullish expectations and reinforces the positive technical outlook. Furthermore, if the price retests this level again in the future and once again responds with an upward move, it would serve as further proof of the buyer's strength. Such a scenario could also boost confidence and encourage new investors to enter the market. Additionally, each upward reaction from this level leads to the formation of higher lows. This is a classic sign of an uptrend. Therefore, the structure observed on the chart is not just a defensive support, but also a healthy technical formation pointing to the continuation of a bullish trend. But we can't rely solely on support levels to make a decision. Let's take a look at other metrics as well. Stay tuned. When evaluating the current position of price movements within the context of Elliott wave theory, it is noticeable that there has been a slight downward shift in the placement of the second wave. This shift is entirely natural, stemming from inherent market fluctuations, and does not present any technical negativity. On the contrary, such minor corrections are often interpreted as signs that the wave structure is forming in a healthy manner and that the market is gathering energy ahead of a significant move. As we know, the second wave typically follows the first wave and serves as a corrective phase where the initial excitement in the market is digested. This wave represents a critical period in which investors take profits, act more cautiously, and new participants observe the market for entry opportunities. The fact that the second wave is forming slightly lower may indicate that investors are looking to support the price on a more solid foundation and reaffirm market confidence at the lows. Such lower-positioned second waves often create an ideal technical setup for a stronger start to the third wave. The correction during the second wave removes excess speculation, shakes out weak hands, and creates a structure where more committed investors can establish positions. This, in turn, strengthens the beginning of the third wave. According to Elliott theory, The third wave is typically the strongest, fastest, and most high-volume wave. It is the phase in which the majority of investors enter positions, market confidence grows, and prices accelerate rapidly to the upside. When the first and second waves are technically well-positioned, the potential targets for the third wave can reach very satisfying levels. The current general structure of the market technically suggests that we are on the verge of transitioning into this powerful third wave. The fact that the second wave formed slightly lower signifies a stronger base being created. This implies that the upcoming rally may start from a more solid footing. Market participants are closely monitoring these levels, and it is reasonable to expect that significant interest will return to the charts once the third wave begins. The clear visibility of these wave structures on the chart is a very positive development from a technical analysis standpoint. The fact that Elliott structures are so clearly observable indicates that the price is moving in accordance with technical principles and is not being swayed by manipulation. This creates safer trading environments for investors. The depth of the second wave often draws the attention of many technical analysts and traders, as the third wave that follows usually generates significant excitement in the market. From an investor psychology perspective, the second wave is also highly important. During this corrective phase, market confidence is tested. Weak hands exit their positions, while stronger and more visionary investors view these levels as an opportunity. This allows the third wave to be supported by a much broader base of investors. The momentum generated by the transition into the third wave often drives the price through key resistance levels and toward new highs. In summary, the slightly lower positioning of the second wave does not indicate an unhealthy structure. Rather, it shows that the formation is being built on a stronger foundation. This technical setup presents both a reassuring and exciting outlook for investors. The market has the potential to reward those who are patient and wait for the structure to complete. Once the third wave begins, the strongest phase of the trend, often mentioned in technical analysis literature, comes into play, offering significant profit opportunities for investors. In conclusion, when analyzing the current structure, it is evident that the positioning of the second wave is forming a technically sound base, making the transition into the third wave potentially much more impactful. The ATR, or Average True Range Indicator, is an extremely important technical analysis tool that allows us to measure volatility in financial markets, that is, how volatile and energetic price movements are. Especially for traders analyzing short and medium-term price movements, a rise in the ATR indicator is a very strong signal that signals the start of significant movement in the internal dynamics of the market. This increase signals the potential for larger price changes in the market and gives traders a clear hint that exciting opportunities may arise. When the ATR starts to increase, it is an indication that prices are moving out of stasis and into wider ranges. This usually means an exit from a squeeze phase or the start of a major trend. Volatility is not only a symbol of uncertainty in technical analysis, but also of potential profit opportunities. This is because widening price movements offer more profit room for both buy and sell positions. A rising ATR indicates that the market is shifting from a stagnant state to a more dynamic and energetic one, and that an acceleration is approaching that will attract the attention of traders. Many traders take an increase in the ATR as an early signal that a directional move in the market is imminent. ATR shows us volatility. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.